Hey everyone, it's been a while since I've posted a video because I was on vacation and there has been a sharp fall in the last couple of weeks. Although at index level the correction is between 12 to 15%, the pain is much more at individual stock level where more than 200 stocks out of Nifty 500 are down 30% and more. I don't want to get into the reasons as it's pretty obvious due to very high valuation after a massive rally in the Indian stock market. But now there's a clear slowdown in the economy that has resulted in weak quarterly numbers. Plus there has been a massive selling by FIs and stock market is clearly in bear territory now. So even companies with good Q3 numbers are getting punished due to high valuation. The challenge at this point is companies that are growing at a good rate already command a high valuation. Although there is a decent correction, the valuations are still elevated in majority of companies. And companies where valuations are comfortable are posting weak numbers. It mainly includes the banking sector. So the opportunities are very limited at this point in time. As I have mentioned earlier also, this pain may persist for a few months. But just like every correction in the past, it will create great opportunity for investment at decent valuation. The good thing is, unlike earlier correction where stock prices would fall and quickly recover, this time there would be ample time to invest. Of course, it won't be easy to see your portfolio in red. It would require a lot of patience and conviction. But that is what is going to separate winners from losers in the stock market. Now that we are in Q3 result season, I am closely tracking more than 200 companies in my weekly series, and in the coming video, I would like to share the update on some key results on my YouTube channel as well. In this video, I want to discuss a very interesting slide that represents the data of last 12 years of sectoral rotation that would help you identify next winning sector in the market. Alright, let's get started. Okay, before I discuss the sectoral rotation slide, I just want to touch base upon this particular slide that beautifully explains the volatility in Indian stock market. And every time there has been a different reason and market has corrected and consolidated in the past as well. Right? So the point is that equity market has remained volatile in the past and is likely to remain volatile in the future as well. It is just that there is going to be a different reason for volatility in the future. So only way to create wealth in stock market is if you embrace volatility, then only you can make money because volatility is going to be part of your journey. Right? So this is one slide. Let's move on to the sectoral rotation slide. So this slide beautifully explains the rotation at sectoral level, and every year there is a new winner that emerge, and this data is from 2012 to 24. In 2012, private banks were the top performer with 68.6% return, and real estate was at second number. What happened then? 2013, your real estate that was second top performer, it became the bottom performer. And your telecom that was the bottom performer, it became the third best performer. Likewise, your IT service that was the bottom performer, second bottom performer, it became the top performer. Let's look at 13 to 14. IT service that was the top performer, it became somewhere in the middle. But then look at metals. What happened is metal was going down, and then 3 years straight it didn't perform. 2016, it became the top performer. In 2014, PSU Bank that underperformed big time, second bottom performer, it became the top performer in 14. Private banks, it remained among the top performer and then it fell down in 2015. Right? And if you look at telecom, it didn't do well in 2014. In 15, it became the second top performer. Next, if you look at pharma, it was the top performer in 2015, but in 16, it became the second bottom performer. Telecom that was the second best performer in 15, it became the worst performer in 16. 17 again it became the third top performer. Then if you look at real estate, it was struggling big time. In 15, 16 the returns were negative. In 17 it became the top performer. Again what happened? In 18 it became the second bottom performer. And telecom that was the third top performer, it became the bottom performer in 2018. Whereas your IT service that was the second bottom performer in 2017, it became the top performer in 18. Right? So look at how sectors rotate. Then if you look at 18 to 19, IT service performance, it went down. And if you look at your private banks, that was the third top performer, it became the second performer, so it has improved. But then what happened in 2020? It again became the underperformer. Real estate that underperformed in 2018 big time, it outperformed again in 2019. And then if you look at the metal sector, it continued to underperform for 18, 19 and 2021. It outperformed big time, right? Likewise, if you look at pharma, it didn't do well in 18. In fact, 17 it was bottom performer, 18 the performance was not great, 19 it was also not great, 20 it outperformed big time. IT services that didn't do well in 19, it outperformed in 20 and 21, and then 2 straight years of outperformance. 22, what happened? It became the bottom performer. Likewise, your pharma that outperformed in 20, it didn't do well in 21, 22. But then if you look at 23, 24, it has done phenomenally well. Next, if you look at your PSU banks, it underperformed in 2019, 2020, and then what happened? Look at 21 and 22. It became one of the top performer PSU banks. Likewise, next if you look at the performance between 22, 23, 24, your metal that was one of the top performer in 21, and again in 22 it was an excellent performer. In 23 it fell down to second bottom performer, and again in 24 also the performance was not great. Next, if you look at the PSU banks, that has done very well. The performance has actually fallen in 24, right? And the private banks, very interesting analysis. This is again very important. In 21 it was the bottom performer. In 22 it did well, but 23 again became bottom performer, 24 again became bottom performer. So what does it suggest? Since in last 4 years, 3 years private banks have underperformed, there's a strong possibility that 2025 your private banks can outperform. And even if you look at the data, you can get a good understanding where your if you look at Nifty 50, Nifty bank performance, its P ratio is 13, and if you look at its historical price to book, it is at 2.7. And if you look at 10 years of data, look at this, it is trading below 10-year median, right? That clearly suggests the entire sector, I mean this include your PSU as well as private, but then if you look at specifically, you can click on individual private banks and look at the valuation. Every private bank today is trading at below their median P in last 5 to 10 years. This is HDFC Bank, you take any bank, right? So the point here is that private banks that have underperformed big time, that can actually outperform in 25. Again, we don't know whether it's going to be next quarter or it may take 2 or 3 more quarters. The results are already out for some of the private banks and it's been a mixed bag. So the banks that are focused on secured lending are doing pretty well, although the growth is not that great. The challenge is with the banks that are focused, that have got a good allocation in unsecured books, right? So they are actually struggling. Having said this, the valuations in majority of private banks are at almost rock bottom level. So it's going to be very interesting how they do perform in 2025. Also, FMCG has been one of the bottom performer in 24, and that's where I think this can also do well in 25-26 once the consumption improve, right? So this has been one analysis that can actually help you understand how the sectoral rotation happens and how a particular sector that outperformed for let's say 1 year, 2 year, it eventually underperformed because obviously when the returns are too high, the valuations become expensive. And when there is a recovery in the sector, valuations are undervalued and then it sees a good return, right? So I hope this particular slide would give you a good insight on sectoral rotation. I don't want to stress this video further. Like I said, we can particularly discuss the performance of private banks. Also, there are a lot of results that have been declared. So maybe if you want, you can let me know in the comments which stocks, which companies you want me to discuss, and then I'll present my analysis. I hope you find this video useful. If yes, do share it within your circle, and I hope to see you in next video soon. Till then, take care.